I would be surprised and shocked if we end up really just rallying into a new high, because if that happens, like, that is actually the most painful sort of trade to retail in general, because I think if we do end up making new highs, many people who haven't taken a trade, because there's going to be a lot of people that were on the sidelines here, unlike us, right? We're holding on to our positions, we're holding on to runners. There's people on the sidelines who are like, damn, I missed the move up, I missed the move down, I want to get into something. This would be the best time for them to enter. This is where smart traders are going to enter short. We caught the bottom. In today's video, we're going to take a look at the S&P 500, the NASDAQ, the Russell, the VIX, the large tech stocks, the crypto market. We're going to put everything all together, and we're going to, as a group, figure out what the next steps are for the market. And this is a guarantee. Like, we ended up catching this bottom, and we're going to talk about that as well. So I hope you guys enjoy the video. Please make sure to like, comment, subscribe, do all that good stuff. Let's get started. First and foremost, we're going to take a look at Apple. Apple is a large tech stock. It's one of the largest companies in the world, multi-trillion-dollar company. So monitoring how Apple is doing is obviously very, very important. We can see here that Apple basically created a bull flag. Bull flags are extremely bullish patterns. We ended up going long down here at the support level of this bull flag, and now we are breaking out, and we made a new all-time high. So this is obviously very, very bullish for Apple. 274, 275 held today. We did not get a red pullback at all on Apple. But we are starting to show a bit of weakness around the 280 area, which is obviously very, very understandable. After Apple was one of the most bullish stocks where it held support and it's making a new high, having some sort of resistance at a high like this is normal. So it can't just automatically continue to rise up without showing some sort of stagnation before another leg to the upside. So this is normal. So what we're looking at is just Apple in general looks bullish. We haven't yet gotten a clear indication of weakness, but we are starting to see some slowing down of bullish momentum. Amazon finally broke and hit above 230. We were up to 232 today, and that was really, really nice. Amazon still looks pretty bullish. As long as it really holds, this zone here, we haven't even really broken down below 228. We held 229. So in general, Apple does look like it wants to continue to rise. It still is a solid long opportunity. Thankfully, we went long down here, and it's working out very well. Microsoft, I was explaining how Microsoft was showing a bullish reversal. What ended up happening? We ended up gapping up. So one of the main losers, right, that did not yet get a lot of buying pressure, right? It was stagnating at the lows. What ended up happening? It started to show a nice explosive move to the upside. So this is obviously a really good sign for Microsoft in general. We gapped up. This is bullish. Netflix also showing some bullishness. This is obviously very, very good that it's bottoming out like this. It is trying to get a nice rip. It's consolidating similar to what Microsoft was doing as well. As long as it holds above 105, it can continue to rally here. Google, of course, one of the most important stocks. I wanted to go short, but this still looks like a really good short. And obviously, it's still bullish, right? This whole structure is still bullish, but in terms of a swing trade, this is yesterday especially was a really good spot to go short. And today even, as long as 320, as long as this high holds, really, I could be wrong, but as long as this high holds, regardless, I think it makes sense, even if we do rally back up to 340. Anyway, we haven't entered a trade yet, but regardless, Google is still holding above 320. It's still holding above 300. Remember, guys, couple days ago, we were at 270, 280 on Google, and it bounced aggressively. Now we're at 320. This is the leader of the tech stocks currently. So when Google is continuing to do very, very well, it's tough to be bearish on the overall market. So I hope this makes sense. We want to monitor what all of these large tech stocks are doing as a whole so that we can help better understand which way the direction of the market is going to go. So Meta is also one of the main winners recently, right? So Meta was holding 580 as support really, really well down here. And now we are back above 615, and we are holding firm still above 630. This was a very good bullish reversal, similar to the early situation of what Microsoft is doing, right? Microsoft did not have this long period of consolidation that Meta had, but Microsoft just gapped up, and it's starting to show an aggressive move to the upside, similar. So let's see if Microsoft could catch up. But regardless, as long as Meta is holding above this 615, it can continue to rise and fill up this entire gap. This is a really, really bullish setup. This is a daily time frame of the VIX. All right. The VIX is finally back around major support at 17. How far we've come. Back to the $16, $17 range. What a time, honestly. This was a complete crush in volatility. The VIX is down 7% today. And the reason why we look at the VIX is because it has an inverse relationship to the market. If the VIX falls, that means the overall market should be doing well. And as we broke below $20, it capitulated, broke even lower. So this drop in the VIX is obviously very, very good for the overall market. And now we essentially are going to see if volatility gets completely curbed and slows down. But essentially, as long as $18.50, $19 can hold, and then essentially 20, as long as 20 can hold as resistance on the VIX, that means that is bullish for the overall market if the VIX fails and drops at resistance. And it looks like, we're getting close to support, 1650 to 17. So there's not as much more room to fall lower on the VIX. So that is a bit worrisome for bulls on the overall market. Next, let's go ahead and take a look at the IWM. The IWM from the most recent highs dropped 9%. And now it is 2% away from the recent highs, and it jumped 8.5% from the lows. So this is obviously a very strong recovery out of the IWM. And to say anything different is prideful. So essentially, all of the levels of resistance support held. We did not even get a pullback at all for multiple days in a row. There was no pullback. We stayed almost at the prior highs and continued to churn and just move upwards. But now that we're approaching 249, 250 area, that is very major level of resistance. Would I want to go aggressively long up here? Definitely not. Where did we end up going long? Down here. This is where we ended up buying the dips. So do we want to enter long now? No, this is not a long opportunity. So let's take a look at the NASDAQ. Okay, to be fair, from all-time highs, the NASDAQ dropped 8.7%. The NASDAQ bounced from the lows 6%. And we are currently 3.5% away from an all-time high. Do we want to now become bullish? No. And the reason for that is because when we take a fib level from the most recent highs to the most recent lows, where have we just failed at? We have just failed at this 618% fib level of resistance. Between the 50%, right here, between the 50% and the 618% fib, is a major, major level of resistance. And essentially, this is where shorts would want to re-enter. If we end up breaking above and gapping up next week above this level without any proper pullback, because regardless, this is a major win. Okay, this was a major bounce. It's like, all right, like I have a question, right? So even if you were bearish, I have a question. So even if you were bearish up here and you bought puts up here, like if you bought puts up here and it dropped all this way and you didn't sell a majority of your position as it dropped and you're still holding on to a majority, right? It's kind of weird, right? It doesn't really make sense. At some point you would have wanted to trade to the long side, right? And that's a hypothetical. Say for example you shorted over here, somewhere over here, anywhere here. This whole drop, this large move to the downside, you should have taken some profit. And as it bounced upwards, you should have sold to remain in profit. So my issue is that for people to have remained bearish this entire run up doesn't really make sense. And it only really does make sense to be bearish a bit now, because we are now finally at a level of like, this is the golden zone in terms of the fib levels. So this is generally a really strong level of resistance. So we just got here. So it's just really concerning that people remain bearish on the initial like rip to the upside. You know, like when the easiest money is to be made, when everything is overextended, that is literally the best time to be going long. Like how many times has this happened before? So, you know, but essentially we're now at a major level of resistance on the NASDAQ as well as the IWM. And then, okay, we could look at the SPY. All right. So the SPY dropped 5.5% from highs to lows. Okay. We're currently about 1.5% away from all-time highs. And from the most recent lows to the highs of today, the SPY is up almost 4.7%. We have almost recovered this entire move. And what's interesting about the SPY is that we are trading above the 6.8% fib, where we are now at the 7.86% fib. So that is generally a really good sign for the S&P 500. It's a very good sign for any stocks if they break above the 6.8% fib. So it would really, really take a very aggressive, bearish move to now become extremely, extremely, extremely bearish. You know, like to make new lows. That's what I'm saying. Do I think we make new lows? Most likely not. Do I think we get a pullback? Yeah, we should get a pullback because the NASDAQ is at resistance and the SPY is literally tapping at the 7.86% fib. What is our bias? We're long. We bought longs at the lows, okay? But still, I still think that there's a lot more room to go for weeks and months ahead. Immediately, if we don't end up, you know, pulling back down to 675, that's fine. But personally, like, I would be surprised and shocked if we end up really just rallying into a new high. Because if that happens, like that is actually the most painful sort of trade to retail in general. Because I think if we do end up making new highs, many people who haven't taken a trade. Because there's going to be a lot of people that were on the sidelines here. Unlike us, right? We're holding on to our positions. We're holding on to runners. There's people on the sidelines who are like, damn, like I missed the move up. I missed the move down. I want to get into something. This would be the best time for them to enter. This is where smart traders are going to enter short. Okay? But this has the opportunity to really, really rally and make it very, very painful for retail traders to rip to the upside. So I would just be very, very careful. And we're clearly at a major level of resistance for multiple reasons. As you can see, this trend line as well. But listen, like, we might get a pullback to 674. But overall, like, unless we get below, it's just tough to be extremely bullish up here. But the most painful trade would be a rip to the upside. It's a pretty amazing trade. Honestly, we bought into 665 calls, and they're at 680 now. The SPY is at 680, so it's a blessing. We're really did very well on the SPY. The QQQ, we got into 590 calls, 595, 630s. So it worked out really well on everything. We also got into Amazon. So yeah, in general, guys, I would just be very wary of trying to go long up here. This is a much better shorting opportunity, but I wouldn't want to go short. Most likely what I'm probably just going to do is for Friday, if the market is opening red a bit, I am going to most likely see how red we open and then probably just lean short for Friday. We'll see. But we are at resistance here. And not to mention Tesla. Tesla, we still have yet to break above 430, but we made a new high today. Tesla is still doing very well. It has a lot of room to the upside, and we are failing right at the 50% fib. So, it still has a lot of upside potential. Big institutional buyers. The most painful situation for retail traders would be a rip to the upside. Now, to top it off, let's go ahead and take a look at NVIDIA and AMD. So NVIDIA obviously got a gap up similar to Microsoft. Okay, so and AMD also got a gap up similar to NVIDIA and Microsoft. So all of these are still showing a lot of bullishness. To be bearish down there made absolutely no sense. All of these were good buying opportunities and worked out very well. So it's pretty spectacular how well overall the stock market did. The crypto market is doing well also. Finally, Bitcoin is finally breaking above 90,000. We held 86. It's holding 90, which is really good. Ethereum held 28. It's breaking above 3,000, which is really good. And Solana is finally back above 140. So this was overall a really amazing opportunity to go long, and it worked out really well, thankfully. So, there were so many reasons, guys. There was just so many reasons to be bullish. The crypto markets were coming to levels of support. All of these large tech stocks were consolidating. This is, it was like the best time, honestly. So I hope you guys enjoyed the video. And with that being said, guys, just please be safe. Have a good Thanksgiving. There's going to be better opportunities in the future. Do not try to force yourself aggressively into any trades because you missed anything. Try to focus on the next best opportunity. Do not force trades because you missed any trades ever. All right, so I hope you guys enjoyed the video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early Friday morning. Have a good one. Take care.